Hey, welcome back to the channel. I'm Michael Neuenschwander with Outlook Wealth Advisors, and today we're going to talk about the 5 critical decisions you need to make before you retire. So make sure you hit the subscribe button, join us for this video, and we'll talk in more depth as we touch on each of these topics. But let's kick it off and say, what are the 5 things you need to make sure that you've addressed before you're really ready to retire or know if you can retire? Let's start with one of the big ones. Right off the bat, one of the most critical things you need to know when you retire or planning to retire, it's not even so much have you saved. Everybody focuses on, well, do I have $1 million, $500,000, maybe I've saved $2 million. But the biggest thing you need to focus on is actually how much are you going to spend? That's the critical sort of first decision to make. And obviously that ties into lots of different things. I mean, where are you going to live? Are you down south in the Houston, the Woodlands area where we're located? Are you on the east or west coast where things may be much more expensive? So what is your lifestyle in retirement really going to look like? And for a lot of people, throwing out sort of common numbers we see on a regular basis as well, we still need $10,000 a month, plus some taxes, plus accounting for inflation. So it says, well, if you're at $120,000 or so a year of spendable income, based on today's tax rates, says, well, you probably need a little closer to, $140,000, $150,000 of gross income. Because unfortunately, the two things they say are still true, death and taxes. And while we talk about some of the things that have changed on the tax front, which we'll address in another video, taxes are still there. And so if that money's coming out of retirement accounts, you still got to deal with it. So when you think about your lifestyle, your hobbies, is that $10,000 a month? Does that hypothetical number fit your lifestyle? Do you still have a mortgage? Is it paid off? Do you want to have a second home? Maybe you're going to have a new mortgage. Or do you need new vehicles? Are you the type that says, I want a new car every 3 or 4 years so I don't have to worry about repairs? So those major things are a critical part to consider in having a plan for retiring. And you can't simply go into retirement and say, well, I'll figure it out along the way. What if your numbers are much, much bigger or much different than what you anticipated? We've got one of the tools we often use where we have people go and complete effectively a budget. Sometimes they keep it in QuickBooks or Quicken. Maybe they have it on a spreadsheet. But a good double check is to actually log into the bank and say, well, here's what you think you spend. Go back and pull up all your distributions out of the bank for last year. Do those numbers match? Or in many cases, you may find, well, what really came out of the bank, maybe several thousand to tens of thousands more. You may not know exactly where it went, but if it came out of the bank, it went somewhere. So make sure you're being honest with yourself on what that kind of income needs to be. So right along with income, though, then is the next step. Well, what should you do on Social Security, or if you're fortunate enough to have a pension? Those things that can produce some regular income for you. Now, Social Security, as many of you know, you can start it as early as 62. And unfortunately, in the case of a widower, it could be 60. But for most people, as early as 62, as late as 70, with full retirement age typically being around 67 or 66 in 8 months, somewhere in between there. So when you look at those, you got to have a clear understanding of, if you start it early, how much of a reduction are you going to take? In general numbers, you could say if your full retirement age was 67, starting at 62, you're going to reduce it by about 30%. So you get 70% of the number you were, quote, supposed to get. Now, if your spouse is going to be collecting on your Social Security, they're going to have a permanent reduction, as well. So when you look at that and say, how much of those expenses is Social Security going to cover? And if you're fortunate enough to have a pension, again, make sure you hit subscribe, because in another video, we dig in specifically to, should you take the pension or should you take the lump sum? But without getting into all those details today, it says, at least if you have a pension, you have the choice. Well, there'll be other additional income coming in that you can count on. Do you have other investments? Maybe you got some rental properties, some other things that throw out consistent, income. Once you've addressed those two, you can begin to realize, okay, here's the gap. Here's what we need to fill in to make sure that your retirement works. Then you start getting into some of the investment questions, meaning how much risk can you take? What kind of return do you need? And unfortunately, those two are still related, right? Risk and return, there's no free lunch, as they say. And so when we look at those two, it says, you need to approach it both ways. So you can look and run some numbers, and in order to make sure we're addressing both inflation and taxes on the income side, we need a certain rate of return. And you can look at that, and then it sort of becomes a math problem. Now you can run the more advanced Monte Carlo, you can find it online, you can get with an advisor who can run it for you. But looking and saying, what are the different variables? What's the likelihood that your plan works? But if they're only focusing on the return side, saying, hey, as long as we can average a 7-8% rate of return, whatever your number may be, first you need to double check and say, is that a realistic number? If you're planning on retiring and it says you have to earn a double-digit rate of return for the rest of your retirement in order for the numbers to work, well, I hate to break it to you, that's probably not realistic. So you need to reevaluate either when are you retiring, what are you going to spend, and what's realistic for an overall return for the long run. And because risk and return are related, that's the other side of the equation that oftentimes people miss, or frankly, they underestimate, is that yeah, even if you can say, hey, the market has averaged 13% for the last 10 years. That's accurate. However, the market has also lost 25 and 30% a couple of times along the way. So when you're retired and you're taking income from your portfolio, can you really sustain a downturn of 25 or 30% on top of the money you needed to take out to live on? And lots of people, when the market's good, says, sure, I can handle risk. But then as soon as the market loses 10% in a month, they feel a little differently. So it's not just a question then of what's the return, it's the question of the risk, how much are you comfortable with, but also mathematically, how much can you actually afford things to go down before you can't recover, before you have to make some changes on what you're doing. So risk return, critically important. The other decision you also have to make is how are you going to address the taxes and long-term care. We'll break those in separately. As we said, taxes, unfortunately, there's no free lunch there. If most of your money is in a retirement account, the IRS is going to have their hand out for some of it. Now, there are some new tax laws that just took place. So again, we'll touch on that in another video and how those tax changes may directly impact you. But for most people, if you want to have a good retirement, a good healthy income, taxes are going to be part of the equation. So how do you reduce taxes, at least keep what the IRS is going to get, to a minimum? So one other critical area, if you've done the math, you've got everything else figured out. You have your strategy for Social Security. If you're fortunate enough to have a pension, you've got that figured out. You've got a pretty tight budget. You know what you want to, what kind of income you need. Maybe you're going to spend a little more early versus later. So you've got everything figured out. The investments, the risk and return, you've got those sorted and they're invested the way they should. What about long-term care? You've got to have sort of the final cushion, the reserve on the back end. As we look at the cost of long-term care today, most people vastly underestimate the likelihood that they're going to need it. However, the numbers do bear out that in a married couple who has a long retirement, odds are better than 50% that at least one of you is going to need long-term care at some point during your lifetime. And the costs today for long-term care typically run for simply assisted living $4,000 to $5,000 a month. But by the time you get to nursing care, memory care, anything more advanced, those can be upwards of $9,000 a month. So either you need to address long-term care in a form of insurance and protection, or you need to address it by making sure that you've grown your assets sufficiently that if one or both of you were to need that later in life, that you can afford to do so without having to rely on kids to go into their retirement money to help you out, or certainly, nobody wants to be on Medicaid as a first choice. So these are the major things you need to make sure that you've got a plan for or that you've addressed as you head into retirement. Social Security and pension, sources of income, portfolio risk, return, addressing the taxes, and addressing the healthcare issues. And first and foremost, as we started off, what is your picture of retirement going to look like? What's that baseline expenses that you need to make sure you can have the retirement that you want and you're not just barely getting by? So hopefully today's video has helped you. We wanted to give you an outline of saying what are the 5 major things you need to at least make sure you've addressed to even begin to think about having a plan for retirement. So once again, we're going to dive into some of these topics in more videos. Again, make sure you hit subscribe, but we'll address Social Security and pensions in much more detail. We've talked about taxes before. We'll have a new video out on that based on the new changes in the tax law here recently. So again, hit subscribe. Thank you for joining us. If you do have specific questions, feel free to leave us a comment or reach out. Once again, Michael Neuenschwander with Outlook Wealth Advisors. Have a great day.